It's time to awaken your inner traveler and zip around the world as money is sent to the people who rely on it. This is Money Travels, presented by Visa. I'm Indre Viscontis. Tim Sini is a lawyer now in private practice, but when he was a district attorney in the state of New York, he led investigations of synthetic identity theft and fraud.
One of the cases we did was in 2018 in Suffolk County that involved more than a dozen defendants. And in that case, true to form, the fraudsters targeted individuals, and then they built up their credit profiles by creating shell corporations and creating fake trade lines. I think there's been this sense that when something like this happens, whether it's a cyber attack or identity theft, the perpetrators are in the wind. You're never going to find out who did it. And there's this lack of justice. And so it was very rewarding to be able to identify several individuals responsible for this fraud, including the leaders of this conspiracy, and hold them accountable. And in one instance, the perpetrator saw real prison time. So I think that sends a message that this is not a victimless crime, that there are real victims here, whether they are financial institutions or whether they're individuals.
Welcome to Money Travels, presented by Visa. On this podcast, we follow the money as it zips around the world, enabling our fellow humans to survive and thrive. And we talk to the experts who are building the tools that will transform the next generation of money movement. In today's internet age, our identity has gone digital. We use our email addresses, phone numbers, social media account logins, and even digital versions of our biometrics to identify ourselves to others. My fingerprints are on my fingers, which hopefully remain attached to me at all times. But my digital print can be sent anywhere to anyone. In this episode, we're going to explore digital identity and financial fraud, how bad actors are taking advantage of the shift to synthetic versions of ourselves, what Visa Direct is doing to help mitigate risk, the challenges of adding security measures in an environment where end users are used to a pretty frictionless experience, and even the ways in which generative artificial intelligence is shaping the landscape. We're going to consider the regional implications of digitizing our identifying features, how close we might be to a global standard of establishing who we are. To start us off, here's attorney Tim Sini again, giving us an overview of how technology has transformed identity theft.
In the past, identity theft was primarily committed by actually physically stealing documents. That could range from mail theft. When I was a federal prosecutor, I worked very closely with the United States Postal Inspection Service, and we did a number of identity theft cases. One actually that involved a corrupt mailman, where they were actually filing fraudulent tax returns. But now, with the advent of technology and the fact that we do everything online, including our retail shopping, the criminals are focused on mining personal identifying information from the web, whether it's just the normal internet or the dark web. It really ranges from sophisticated hacking schemes to looking over people's shoulder.
So, Tim, what exactly is synthetic identity theft?
Synthetic identity theft is unique in that the criminal essentially uses identifying information from real people and combines it with identifying information from a different individual or completely made up information. And so that's where you get the word synthetic. The way I do that as the criminal is I tend to target someone who is not monitoring their credit information, or someone who has a low profile in terms of credit scores. I actually monitor my children's credit report. Now, I have young children. They should have zero credit. And so if I see a credit card in their name, I know there's a problem. The next step then is to build credit in that person's name. And they do that by typically applying for credit cards. Store credit cards are a good target. And they'll do that with, several credit cards, but also just other normal things we do in our everyday life to create the appearance of reality, like library cards, loan applications, car loans, whatever they can get. And even if they're getting denied credit, it goes towards their cause because it creates this financial footprint of this new individual, this synthetic identity. The next thing that typically happens is the bust out, where the criminal scheme will take out a bunch of credit and they'll buy things on credit cards. They'll take out loans. They'll get the proceeds from loans. They'll often try to max things out so they get the most value, and then they just walk away from it. And the financial institutions are left holding the bag. And as we all know, that cost is eventually passed down to the consumer. Not to mention that in some cases, the actual individuals whose social security numbers were stolen, it takes an enormous amount of time for people to recover from being victimized by identity theft. And often it stalls their ability to get credit, which is, of course, not good for the economy generally. So it's a huge crime that has significant impacts on our economy, and it's something that is growing at an extremely fast pace.
So, what can a network of networks like Visa Direct, with its long history as a trusted operator, do when it comes to helping secure money movement? This is Matthew Charpentier. He's Vice President and Global Head of Authentication and Identity at Visa Direct. So, Matthew, what do your children think you do?
I think my children believe that I'm in the CIA because I've been telling them that I'm in a restricted access workspace and I catch bad guys. And because we're in the DC area, to them, it translates to me being in the CIA, which is far from true. But I think that's what they think I do.
Well, they sound like pretty smart kids. One of the things that I find really fascinating is how our identity, how we identify each other and ourselves has changed, especially in the last 10 years or so. It used to be in order to open a bank account, you needed to go and show your government issued ID and so on. What's different now? Can you tell us about the digital identities that we all have and what goes into those?
You're right. It changed a lot. It used to be all about your paper credentials and having a passport, driver's license, and using that to prove that you are who you say you are. With a lot of the experiences and transactions moving online, we now have a need to create a system that can allow you to prove that you are who you say you are online without having to go to a bank branch or to the DMV or to a physical space to show your physical credentials. And so digital identity is that. It's how do we prove that you are who you say you are when you're transacting online. And the level of assurance that we're going to need is going to be different based on the use cases. And so digital identity is going to mean a different thing depending on where you are, depending on what you're trying to do, depending on who you're trying to transact with. But by and large, it's about proving that you are who you say you are when you're online and trying to conduct a transaction online, whatever that transaction is, whether it's logging into a website, moving money, buying something. It's all about proving that you are who you say you are.
With each new instantiation of a smartphone, there are slight changes that happen in the apps, especially the ones that I think are about confirming our identity. So going from a passcode to a thumbprint to a facial recognition tool, I wonder if you can sort of describe the evolution of digital identity in, say, the last 5 or 10 years as it has moved through these different stages.
I think we've come a long way, but we still have a long way to go because we're nowhere near the finish line on digital identity. It is still, frankly, pretty clunky, and we don't really have a robust solution for all use cases. We've made a lot of progress because if you look back 5 or 10 years, a lot of what you had to do was set up a username, a password, remember all those different usernames and password, and they ended up all being compromised and you had to restore them. So we're making progress in the sense that now a lot of those interactions where you have to confirm your identity can be done via biometric verification on your phone or your device. And we have better processes by and large to allow you to claim your identity online. If you're trying to do money movement online with a large amount, or if you're trying to make what would be considered the risky purchase online, there is still some friction that is involved. So we need to move to a better place where a lot of our transactions online are seamlessly authenticated in a way that is secure, interoperable, and standardized.
I mean, it sounds like an incredibly complex issue, especially when you're talking about all the myriad ways that we now use our digital identity. How is Visa positioned to help their partners and clients solve this problem?
You're right that it's complex. And I think the key thing to understand is that you're not going to need the same level of assurance for proving that you are who you say you are for every transaction. If you take the most basic example, digital identity can just mean basic user recognition. We just recognize your device. We recognize that you've been on that website before. And so that website welcomes you back. That's the simplest form of digital identity. Obviously, you want a lot more if you're trying to transfer $200,000. And that's where the level of assurance is going to need to be much different. And so the way we're thinking about it is along the probabilistic and deterministic spectrum. What we mean by that is probabilistic is all about using the data we see during a transaction to seamlessly confirm that you are who you say you are. Deterministic is more about using an irrevocable credential that is typically issued by an institution that has verified your identity. I'll give you a couple of examples of how that would work. If, let's say, you're trying to send money to a family member and you're trying to send $200, it's a transaction that you do very regularly and you're doing it from a device that you've used before. We recognize the IP address, the person you're trying to send money to, you've already sent money to before, and that transaction was not disputed, was not flagged, and that person hasn't changed their email address. And long story short, there are no red flags. When we see all that data as Visa, we can recognize those patterns and we understand that their transaction is low risk. And so we're not going to need to step it up. We're not going to need to conduct additional verification. Now, let's say that you're now trying to send $100,000 to an individual that lives very far from where you are, and you've never sent money to that individual. It should raise a lot of red flags. And as an individual, you're going to want us to make sure that you are indeed who you say you are. And so what we're going to do there is two things. One, make sure that you are who you say you are and you're in control of your account. Step two is make sure that you are sending the money to who you think you're sending the money to, and you're not being scammed into sending money to a fraudster. And that is another thing that Visa has a lot of data to be able to do very well, because we see transactions happening across the ecosystem and across our network, and we can identify accounts that are fraudulent accounts and are being used by fraudsters to receive money from scams, for example.
Last season on Money Travels, we spoke with Sue Anayans, who made the distinction between authorized and unauthorized fraud. So it sounds like what you've just been talking about, this case in which a person is sending money to a fraudster. So in a sense, you would consider that authorized because the person is kind of voluntarily doing that, not knowing, of course, that they're being scammed. It sounds like Visa has a tool here in terms of looking at all the other times in which that particular account has received money and that has been flagged as a scam or so forth. Can you talk a little bit more about that aspect of Visa's product where it might be able to help recover or stop instances in which the scam or the fraud is actually coming through an authorized direction?
We actually have several tools. So some of our tools are trying to defend against blatant fraud attempts. So let's say you're being scammed into sending money to someone under false pretenses. Typically, you're going to send money to an account that belongs to someone who is not the actual person you think you're sending the money to. So if you're thinking that you're sending money to Joe and the account belongs to Mark, then we have tools to check for that. And so that's where you're going to have prompts right before sending the money saying, hey, we see that the account belongs to Mark. Do you really want to proceed with that? Can you check that you're not really making a mistake? The other thing that we're going to have is a little bit more of an analytical tool. It's called RTP Prevent. And as the name implies, it's meant to prevent fraud on money movement in general and RTP networks in particular. And what we're going to do there is look at the patterns of specific accounts and identify accounts that are being used by fraudsters to send, receive, or facilitate fraud in general. And because of our unique position as a network, we can see the money movement and we're going to be able to identify accounts that have unusual activities. And so if you're trying to send money to someone who is supposed to be a family member, or relative, or frankly, anyone that you want to send money to, and that individual is posing as a regular individual, but that account has thousands of transactions a day from all over the world, and half of them end up being disputed, that's a pretty obvious red flag. Our models are smarter, and fraudsters, unfortunately, are smarter also. And so we have a lot more complex analytics and graph relations databases to help us identify fraudulent accounts. And so when we deploy all those tools, we are catching what Sue called the authorized fraud, which is when you are indeed in control of your accounts, but you're just being scammed into sending money to a fraudster. That's a lot of our focus right now, and that's where tools like the account name inquiry and RTP Prevent are really going to be helpful.
That reminds me that there's probably a lot of tension, both in terms of your clients who use your tools and the consumers themselves as they're trying to choose which kinds of tools they want to use to move money, between the ease at which we want to be able to do this in this current culture and climate where everything, is fast, and of course the security with which we want to do it. So how do you manage this tension between having enough friction that the transactions are about as secure as they can be, while still making sure that there is ease of use and, that the customers, the end users are choosing to use those products because they feel as if they're making their lives easier?
That's probably the hardest part of my job, finding the right balance between friction and fraud, because it's fairly intuitive. If you want to stop all the fraud, then you can introduce a lot of friction and make sure that we have you verify your identity for every single purchase. Obviously, that is impractical. At the other end of the spectrum, if you have no defenses, it's paradise for fraudsters. And so we need to find the right balance between friction and fraud. And the way we do that is by having very robust risk assessments for each transaction. So we capture data when we process a transaction, obviously, and we use that data to assess the riskiness of that specific. If we see things that we've already seen before, and if there are no red flags, then we're going to have that transaction follow what we call the green path, which is essentially a seamless authentication, no friction, and that transaction is going to go through. On the flip side, if we see some red flags, then we're going to step it up and we're going to increase the level of assurance that we need. And so that's really a lot of what we do. We build very sophisticated models that are using AI and other techniques to assess the risk of each transaction in real time. We're talking milliseconds.
And I imagine you can kind of move around that threshold for what you deem to be high risk and therefore need an extra check versus low risk. It reminds me of a lot of scientific studies that look at variable and complex data, and we kind of set a threshold we call a p-value, probability value of what we are okay with, if we make the wrong calls.
Yes, absolutely. It also comes down to what consumers are used to and what is the default practice in their market. In a market like North America, consumers are addicted to frictionless, seamless, quick experiences. On the flip side, in markets like Europe or the Middle East and Africa, there is a higher expectation from consumers that their banks and financial institutions and payment networks in general will take steps to protect their money and to protect the transaction. And so there is almost a baked in expectation consumers are going to be required to take an extra action to secure the transaction. And if we go to India, for example, that's another extreme where it's actually a regulatory requirement that transactions are stepped up to make sure that there is no room for fraud. And so every single transaction in India has to be two-factor authenticated and stepped up, which is kind of the other extreme end of the spectrum where friction is higher and fraud is lower. So yes, it very much varies based on a number of factors.
That makes a lot of sense to me and resonates with my own experience of the kind of masterful way that Europe can add red tape to almost every transaction. I wonder if that also has to do with how digital identities differ in different parts of the world. Can you describe maybe some of the geographical differences in how digital identity is both used and issued in, say, Europe versus India versus North America?
You're correct that it's very different in different parts of the world. I think we're seeing three main models emerge. One model is kind of state-led digital identity and digital identities that are being issued by a government entity to consumers, and that identity is stored in a number of different formats. But by and large, it's a credential that is issued by the government and is stored on your device. We're seeing that in India. We're seeing that in Singapore. We're seeing that in several markets where the government is taking the lead role in issuing essentially an electronic version of your ID to their citizens. The second model that we've seen in a lot of countries in Europe is consortium-led digital identity. We've seen that in the Nordics. We've seen that in Belgium. We've seen that in several markets in Europe. That's where a group of companies or institutions come together and define the standards for how they're going to issue a digital identity. Banks are especially well placed to do that because they have to verify your identity to open an account. And so banks in most countries have verified the identities of the majority of the population in that country. And so they're well positioned to create a network to issue digital identities to their clients. The third model, which is a little bit more of a probabilistic model, which is where it's mostly about using data and signal to assess the risk of a specific transaction or person. That's the model that is still mostly prevalent in North America because we don't really have a strong state-led digital identity, but we have very robust probabilistic identity solutions in the US. So the models vary a little bit. Ultimately, they're probably going to converge, and we're going to end up with one model that is probably going to be more prevalent depending on the part of the world, but it's still relatively early in the life cycle, to be honest.
Do you ever foresee a standard digital identity worldwide? The way that a passport is kind of a standard physical identity marker worldwide?
That's the $1 million question, or potentially even the $100 million question. You're right that with physical ID, all the countries came together and issued a standard for what a passport looks like, how it's used, and now the system is interoperable. And that is a standard that is accepted across the globe. We're very far from that with digital identity. And even in areas like the European Union, which is a block of countries, you cannot use a digital identity issued in Norway and Spain. And that is a problem for travel. That is a problem for all sorts of use cases. And we're going to eventually need to find a way to have interoperable digital identities at scale. And I think that's an area where Visa is well positioned to help because we're a global network. And frankly, one of the things that we know how to do is how to seamlessly make global transactions happen. Because as you know, when you use your Visa card that is issued in the United States and any other country, it works just as well as if it were a local card. And so I think that's an area where we're going to be able to help. But I don't think anyone has figured out the solution and what it will look like. But eventually we will need to get there, yes.
We've been sort of talking about situations when we've used examples where it's a single instance of fraud. So one transaction as being the item of interest. And I imagine that with the move away from, say, passwords, where once you have a data breach, that can follow you until you change that particular password and login. I mean, I just even this morning got another alert about how a password I used many years ago, showed up somewhere on the dark web, and but it's no longer an issue because I don't use that for any of my sensitive accounts. But you can see the longevity of that kind of breach. What is the long-term fraud risk when it comes to a digital identity? That is it more or less concerning? I can imagine a case in which that digital identity, which is not as easily changeable as, say, a password, might follow you for a longer period of time. But is that true, or does it change all the time?
It's definitely true that we're going to see new threats emerge and the risk is going to move for a couple of reasons. One, the technology is going to be different. So the fraud vectors are going to be different, but also fraudsters are constantly adapting and moving to the weakest point. And so I think you're right. We're going to see some things and some threats emerge that we're not necessarily used to today. For example, biometrics are being used pretty broadly today, but the main form of biometrics that you're using today is what we call biometric verification, which is you use your biometric to unlock your phone. What that does is the biometric template is stored on your phone, on the secure enclave on your phone, and your phone is verifying that the face, the finger that you're presenting matches the template that is stored on the phone. That is relatively low risk because the only way for fraudsters to get access to a lot of biometric templates is to hack into each and every single phone, which is not very scalable. Now, if you move to models where biometrics are used to recognize people and all the biometrics are stored centrally, then you're creating a little bit more of a honeypot for fraudsters where you have biometric templates stored in one place. And so that creates a much higher cybersecurity and privacy risk. We're just going to need to make sure that we stay on top of the fraud vectors.
Do you see specific risk coming from this explosion of generative artificial intelligence that now is being openly available? Up until a year ago, it was pretty hard to use some of these models to generate things, but now it's freely and openly available. Does that keep you up at night?
A little bit, yes. We've seen this before, so I'm not overly worried about it because whenever there's a new technology that is becoming available, most of the use cases are positive, but also fraudsters will get their hands on it and start using it. And so if you look all the way back and you look at card payments, initially credit cards were just nothing more than a piece of paper with a number on it. And that was very easy to attack. Then we started putting mag stripes on card. And for a relatively long period of time, that was very secure because the technology to replicate a mag stripe was very expensive and not scalable. Then all of a sudden, that technology became relatively easy to use, and fraudsters could create fake cards relatively easily and had ways of creating mag stripes very cheaply. So that's when we moved to the chip, and the chip is really hard to crack, and it's a very secure element. And so fraudsters have moved online, and that's where we started securing the ecosystem online. So fraudsters are constantly moving and using new technology. We just need to make sure that we stay a step ahead of them. And that's the same thing for generative AI. They're using Gen AI to create fakes and to create scams and to trick people into believing something that is not real, to trick systems into believing something that is not real. Unfortunately, we see a lot of fraudsters creating deep fakes to try to trick systems into creating a synthetic identity or taking over someone else's identity. And as a result of that, we need to step up our game when it comes to liveness recognition and detection of deep fakes. And so it's a constant game of cat and mouse, and we just need to make sure that we're one step ahead.
One of the reasons that Visa has lasted so long and continued to have such a strong place in money movement is because it's trusted, and it has been for a long time. How is Visa ensuring that that trust continues even as the way that we move money changes?
Yes, you're absolutely right. A lot of what we do is create trust, because at the end of the day, when you use your Visa credential, whether it's a card or any other form of money movement, the promise that we make is one of trust. We promise to the merchant that they're going to be paid, because if, as an American, you show up with an American check in Asia, they're not going to accept it because they don't know that they're going to be paid. They don't know if it's a legitimate check. They don't know if that is a valid form of payment, whereas a Visa credential is recognized and trusted as a valid form of payment. We make a similar promise to financial institutions. We make a similar promise to cardholders. You know that if you buy something and it's not delivered or doesn't meet your expectations, you're going to be protected. And so everything we do is around creating trust, because at the end of the day, money movement and payments in general only work if there is trust. What my team does is a relatively small part of that, is creating trust that we're not letting fraudsters in. Because frankly, whether you're doing an account to account money movement or a card transaction at a physical store or a purchase online, the requirements for trust are the same. The tools that we deploy are very different, but the requirements are the same. You need to know who you're dealing with. You need to trust that you're going to be paid as a merchant or as a recipient. And you need to trust that you're dealing with someone who is reputable and that you're going to be protected as a consumer and that your money is safe.
Well, Matt, thank you so much for joining us on Money Travels. We'll let you get back to that restricted access room and do whatever it is that you do for the Visa.
Thank you. It was a pleasure.
Sometimes it seems as though fighting fraud and keeping our synthetic identities secure is an almost unwinnable battle. But it's comforting to know that there are sophisticated systems and teams in place to help reduce the risk. But what can we as individuals do? For the last word, here's Tim Sini again.
Oftentimes, the bad actors are not as sophisticated as you think. So if we remain vigilant, we can prevent most of what we see in terms of identity theft. A lot of it's common sense. It's all things that you've heard a million times. Use sophisticated passwords. We should be using authentication where it's offered, which nowadays it's offered by just about every important service that we'd be using, like a banking service, a credit card, email, the cloud. If we're utilizing publicly accessible computers, we're making sure that we're not saving our passwords. We should be deleting internet history. There's all sorts of steps that we can take that fall into sort of the prevention category. In terms of early detection, everyone should have credit monitoring. And most of us have been victims of some sort of cyber intrusion. And so someone at some point probably has already offered it to you for free. And so that's something we should all be doing.
Thanks for listening to this episode of Money Travels. And thanks again to Tim Sini and Matthew Charpentier for exploring the implications of digital identities with us. If you've enjoyed this episode, please subscribe or follow the show and leave us a review so that other people can find it. Until next time, I'm Indre Viscontis, and this has been Money Travels, presented by Visa.